The big question everyone asks is how much car insurance do I actually need? There's a couple different answers, and let's dive right in and explain the coverages limits that are available and what coverages you should be carrying. Now, I'm not legally allowed to tell you everything because I'm not necessarily licensed in every single state, but I'll give you the average that you're going to find that honestly I think is probably going to fit. I just can't legally say that it's going to fit your scenario because everybody's different. The largest thing that most people don't realize is when you have a lawsuit, you have an accident, you cause damage, you injure someone, pain and suffering, all of those things that can happen in a car accident. If you can't afford to pay someone back, sure, you can go under bankruptcy and there's might be some ways out of it, but in most cases, your income can be deducted by 30% in most states to where I personally don't want to live on 30% less income. I don't think I could. And even if I could, I don't want to. Let's dive in and go over the liability limits that you should be carrying and what you should be looking out for with your car insurance. The first piece that you should think of is the best way to think of car insurance is there's three pieces. There's coverage for you, coverage for others, and coverage for your vehicle. Now, I made a video that goes over the car insurance 101. I'll link at the end that will go further in depth in those, but let's dive in quickly and just explain the differences. Coverage for others is the liability limits. It's if you injure someone, how much medical is it going to pay for them to go to the hospital, get the broken arm fixed, all of those things, and the pieces that can happen from an accident. It doesn't end there. It could be medical, but the other part is coverage for their vehicles. So this is the bodily injury and the property damage. This is the amount of coverage for their vehicle. The issue that you're going to run into is each state has a minimum coverage that you have to carry. The issue that you're seeing is states are starting to raise those minimums and people aren't necessarily happy, but it's because those coverages were too low already and it's not enough to cover the average person. For example, if you get in a car accident with a 1992 Toyota Camry, odds are you have enough coverage. There's not likely going to be property damage that go beyond $10,000, $20,000, $30,000 worth of repairs because they're going to total the car. They'll pay the car off, which is probably $2,000, and you walk away. The person that you damaged the car may or may not be happy, but at the end of the day, that's coverage. Now, on the other hand, let's take a BMW that might be a $60,000 car. Is your $30,000 property damage enough to pay for that vehicle? Well, no. That means $30,000 is going to come out of your pocket to pay for that. Well, I don't have $30,000. I'm going to go bankrupt, all of those things. Again, we just talked about that. They can deduct in a lawsuit part of your income from future payments to make the person whole and repair their vehicle, get their vehicle fixed. Now, there are different states where it gets a little bit confusing. We won't go super in depth, but some are not at fault states, some are at fault states, essentially where you go fix your own car, they go fix their own car, and then everyone fights it out in the background. When you really dive in deep, that is honestly the same thing across the board. It just matters on who's paying first. In the not at fault states, you go fix your car, I go fix my car. That all is great, but the insurance company is still going to go after you for the recoupment of the amount of money that they just paid out. So be careful in those situations if you have enough property damage. I would think that is probably one of the biggest things that I see people go low on, where they should go high. The other part that you should be thinking is, what's the cost? Honestly, adding property damage in most states is not very expensive. So doing 50,000 minimum, honestly, I think is 100,000. That's going to be a better benefit. Okay, Mark, you're getting into some details, some stuff I didn't really care about. Just tell me what the average is. So the average that I see, I'm in Michigan currently. We insure 12 different states, but our average is 250,000 per person, 500,000 per accident. Write that down. If you ever watched the movie Van Wilder, he says, write that down. 250/500. That's bodily injury if you hurt someone else. It's per person, per accident, and then 250 or 100, most people usually do. That's the property damage. 250, it's only, if it's cheap enough, keep the 100,000 so that if you do hit a nice car, unless you hit a Ferrari, you're probably covered in that scenario. Uninsured, underinsured motorists, this varies across the board because states like Michigan don't charge a lot for it. So yeah, 250, 500 for uninsured and underinsured motorists. If someone hits me and I don't have enough or don't have any, we technically have our own medical, so that's why it's cheap, is I'm technically double covering it. In that case, it doesn't matter. In states like Georgia or in states like Florida or states like Tennessee and Virginia, that's different. There isn't a medical coverage that's required to be carried, so you don't have that medical. now the insurance is on the hook, it's going to be more expensive. So keep mindful of those extra costs that you add onto a policy. That's where having a local agent or having an independent agent that knows what they're doing makes a difference, because they're going to take the time to test it one at a time. They don't always have the right answer, and they're not an AI that can just instantly tell you, because rates change constantly with different carriers. So knowing the right type of carrier and the fit that you are makes a huge difference. What those independent agents typically do is they'll get their base level. They'll do the 250, 500, 100, the 250, 500 for uninsured motorist, and they'll play with the numbers. They'll reduce it to 100, 300. They'll add it to this, and they'll see the cost difference. If the agent is doing their job correctly, they're going to spend some time building your policy based on what makes sense in their opinion for you to have the right type of coverage. For someone that doesn't have a ton of income, maybe you do the middle line coverage, but property damage was only a couple dollars more, so let's increase that. Let's give you the most we can give you for the least amount of cost. I get it, price isn't always the factor, and it really never should be for the agent. They really should focus on the coverage first, making sure you're protected, and then the price second. But as this world goes around money, and money makes a huge difference, a lot of agents just don't understand that. They just quote price. And if that's the case, you shouldn't be working with that agent. By the way, if you are shopping for car insurance, I'll put a link in the description below where you can work with an independent agent. They can shop you with multiple companies: Geico, Progressive, Safeco, Nationwide, all those guys, Allstate even, and they can check what options are a good fit for you. They take that profile, that's your data, your insurance score, your car, your location, history, all of those things, and they plug it into different companies and not just get one price, but they try to play with the numbers to find out which company is going to give you the best rate. If you are looking for something like that, I'll put that link in the description below. Otherwise, the next piece that you need to focus on is determining your legal needs. And your legal needs is what we talked about before, your assets. What do you own? If you own your car outright and it's a $30,000 car, if you could sell it tomorrow for 30 grand, you have an asset worth $30,000. If you go and cause an accident, technically they could go after your assets. Depends on the state. Some states let you keep your car, so there's nothing they can go after there. It just depends on what legal. I'm not a lawyer, so you gotta talk to a lawyer there. If you have a house and your house has $100,000 worth of equity, you can be sued for the equity and have to remortgage your home or have to pull money out of retirement, even though they usually can't go after retirement, but you got to pay it somehow, right? And if that deems you at fault in a claim, that could cause you to have to pay a lot out of pocket. That's why you want to analyze your assets and make sure that you understand, what do I actually have on the line here that somebody's going to go after? Now, the goal of insurance is to make your insurance a little bit better than you. Because if your assets are this and your income over the course of your life is going to be this, add those up and kind of get an idea. I might be worth $1 million, let's say. If I get $1 million in insurance, who are they going to go after, me or my insurance company? Your goal is to have your insurance company be a little bit wealthier than you, because then they're likely going to say, easy money is over here. We're not going to mess with that person. Asterisk, you got to be a little bit careful there, because once that runs out, you're next up. So if you don't have enough coverage there in a major claim, then yes, they're still going to go after your assets afterwards. That's usually what you find people getting sued for, which is pain and suffering. If you've affected someone's life enough, then they're going to come after you for those additional pieces that they want to make them whole. That's what the definition of insurance is, making someone whole, which is back to the best life that they had before the claim or before the accident. Especially if it's your fault, you got to be very careful that you have those coverages. So how do I get that fit? How do I get the best pricing based on those coverage that we just talked about? There are a few things that you can do in your policy that most people don't realize you can do that will make it less expensive. If you do something called telematics, where you prove to your insurance that you're a good driver. If you aren't, then kind of skip to the next one. That's probably me. I'm not the best driver sometimes. I like to go fast. I like to brake hard, cut people off, and give them a thumbs up, right? So, not always. Honestly, I'm hoping that one day it's not a neighbor of mine and I kind of yell at them and realize, oh, that was me. If that's the case, you can get a huge discount. Some companies give 40% off. So when you do what's called a telematics, where you let them watch your driving habits, most of the time it's for 90 days, they're going to give you a really large discount. If you're someone that has a home or does renter's insurance, that can combine and give you a better deal. A lot of people don't realize, and you never should purchase the insurance because of this, but adding renters to an auto, if your auto is several hundred a month, it probably will actually save you money to add that coverage. The benefit is you're protected for liability pieces, if someone breaks into your apartment, if there's lots of different scenarios, your TV or couch, if there's a fire, stuff like that, but it also makes it cheaper. So having that is a benefit in most cases for most people. So what should you expect to pay? If you're doing the average, the 250, 500, our average policy across hundreds of clients is about $1,500 every year. That's pretty good because the national average is closer to $2,100 per year, depending on the company or the customer that you're with. Honestly, if you're between $1,500 and $1,800, I think you're in that sweet spot. If it's cheaper than that, great. You have the best option. Just make sure you trust the agent and that you have the right coverage that fits what your risk is, any type of liability risk or anything that could happen if a mistake ends up happening. So should you do the state minimums? Most cases, no. Almost every case, no, because doing the level above that, in my experience, is not very expensive. It's not a big jump in price. But again, if you look at all your assets and you're like, I don't have anything, I have a good life, I just don't have a lot of that I own. I live in an apartment, there's nothing, like my job is, 30, 40,000 a year. It's not going to make me millions. And I'm comfortable. I'm happy with where I'm at. Then looking at the lower limits, honestly, I would lean towards the 100,000 per person, 300,000 per accident, but some states offer 30,000 per person and 60,000 per accident. My personal opinion is that's a little bit too low because that's just not enough. If somebody gets majorly injured in an accident and it's a $300,000 claim, even the 100,000 isn't even enough. Even the 250,000 isn't enough in that scenario. And then it's kind of like, okay, what do we do next? What's the next piece that we have to go through? I know the answer isn't perfect. It's not the one that everyone wants. It's the one that we have. It's based on the person, based on the risk, based on what you're willing to put up in case you do have something happen. Let me know in the comments below if you think that there's a coverage that should be added, or if there's something that you're missing on your policy that you think that was or isn't a good coverage based on what you have to carry. Again, if you're shopping for insurance, I'll put the link in the description below. Otherwise, if you want to learn more specifically about those limits and the liability and those coverages that we just talked about, I've got my Car Insurance 101 that's going to go further in depth. If you want some extra discounts that you're just trying to find, I've got a discount video here that goes into depth with that as well. I'm Mark with Think Insurance. I'll see you in the next one.